Although there have been some difficult days for Tesla stock, experts and analysts have told us that better times are really coming. We have grounds to anticipate that Tesla stock may soar 200% in the next days, since a significant number of bullish triggers are still in view and some are still in the works. We'll be looking closely at these bullish catalysts in today's video, discussing the relevant ramifications of their impact on the company and when they might cause Tesla's stock price to soar, so make sure you continue to look. Despite a general market decline in tech shares, the value of Tesla's incorporated stock, which reached a $1 trillion valuation early this year, has reversed somewhat in 2022. The company's fortunes could not be changed despite a stellar earnings report and record profits, as the stock fell more than 11% on the call and has continued to fall since then. The Austin, Texas-based company has a market valuation of $832 billion, ranking it as the sixth largest company in the world and the most expensive automaker. Despite the company being on course to achieve its objectives and overcoming the obstacles put in its path as of March 7th, the stock had only climbed by a little percentage before turning once more in the wrong direction. There may be a number of causes for this. This decline is undoubtedly being influenced by the shadow cast by the events in Ukraine and the imposition of sanctions against Russia. High-tech businesses generally, and the electric car industry specifically, are likewise under a dark cloud. Additionally, investors' concerns about traditional original equipment manufacturers catching up to Tesla and maybe surpassing the Pioneer brand have caused them to sell off shares. According to Seth Goldstein, senior equity market analyst at Morningstar, some of the sell-off may have been caused by the market revising its long-term expectations for the company in light of heightened competition. He added that the stock price fell after Tesla CEO Elon Musk stated in November that he might sell additional shares after recently selling roughly $7 billion in the company's equity. After the vote, the billionaire sold 10.1 million Tesla shares for a total of $10.86 billion. Unlike some investors, his company remained steadfast and kept to their target price. Goldstein continued, however, several Tesla-specific issues may be fueling market unrest. We do not believe that management's likely move to sell stock should cause us to revise our Tesla prediction. ELM. The company's CEO is engaged in a protracted bitter dispute with the Securities and Exchange Commission over a 2018 social media usage agreement. Despite assurances from the brand, the inauguration date of the company's production facilities in Germany has been repeatedly delayed. The facility is considered essential to Tesla's plans for expansion in Europe and ultimately as a whole. The manufacture of its envisioned electric pickup truck has reportedly been postponed until at least the first quarter of 2023, according to Reuters. It had been planned for late 2022, but it won't happen until at least the first quarter of 2023 now. The only things we have so far highlighted are bad things, therefore why do we think this stock will soar by 200% in the following days? It's because the business is going through a turnaround on a number of fronts. Let's begin with what is happening in Ukraine. Investors are beginning to realize, in contrast to the initial panic, that the Russian sanctions will undoubtedly have a good impact on the entire electric vehicle industry, with Tesla leading the way. Numerous nations will search for alternatives in their attempt to boycott Russia, one of the major oil exporters. We don't need to tell you that electric and solar power are the exact needs that Tesla serves, so the stock valuation will benefit. The corporation might possibly benefit from any increases in fuel prices or government restrictions on more conventional internal combustion engine vehicles in the upcoming few years, according to experts, who seem to be in agreement with this statement. What about legacy original equipment manufacturers is the next consideration. Some claim they are already in the lead and will win a sizable portion of the market, but we think this is blatantly false. Despite China and the U.S. being two of Tesla's most significant markets, the company leads the electric vehicle sales market in the U.S. While most legacy original equipment manufacturers can't catch up and are presently having trouble with their technological aspects, the corporation delivered over 936,000 automobiles worldwide in 2021 and is said to be well on their way to surpassing their deliveries from the previous quarter. According to a Deutsche Bank analyst, Tesla's excellent trajectory for its battery technology, capacity and particularly price will continue to speed the world's transition to electric vehicles and significantly increase Tesla's lead in design innovations. More productive factories, full production increase and improved material sourcing, decreases in labor hours, and localized supply chains. The expert, according to Rosner, stated that rivals in the electric vehicle market haven't even begun this effort. We wholeheartedly concur and think that as more people become aware of this, There will be a change in market sentiment that will drive up the price of Tesla's shares. The stock price hardly seemed to be impacted by Elon Musk's antics. The company's fervent supporters didn't seem to mind that Tesla was the target of several discrimination lawsuits, recalls, and social media posts showing its most recent self-driving software shooting a vehicle at a bike. The Gigafactory bill is a whole other issue, but it contributed to a decline in investor confidence in the brand's performance this year, particularly after the announcement that the delivery date for the Cybertruck had been delayed. However, the Gigafactory bill is now operating, which can portend a rise in stock price in the future. The project, which will include a battery factory with a capacity of more than 50 gigawatt-hours annually, significantly beyond that of European competitors, has finally begun construction by Tesla. Initially, on-site automotive batteries will be purchased from China. By the end of the following year, according to Musk, volume manufacturing will start at the German battery plant. With Volkswagen presently dominating the European market for Cybertrucks, this translates to increased car sales and higher profits for the electric vehicle company. Musk said he wants to build 250,000 cyber vehicles a year, but that it will take time because of the rapid development of new technologies. With their partnership with Panasonic currently thriving, it's unlikely that batteries would be the limiting factor in Cybertruck manufacturing, he said. He also brought up the issue of affordability, saying that while the Cybertruck has amazing technology, he was more concerned about how to make it affordable. It also appears that Tesla's Cybertruck manufacturing has been delayed because the company is changing fee. According to Credit Suisse's report, analysts are divided on the stock price. Some think the company will continue to grow, while others think it is expensive. With less ambiguity about demand and significantly more uncertainty about EV supply, the company should be a major winner. It has a product advantage over rivals and the most thorough supply-side strategy in place. Tesla has a competitive advantage in supply-side vertical integration, software product simplicity, and capital accessibility, in addition to avoiding the difficulties that legacy original equipment manufacturers encounter with regard to margin dilution, production changeover, and distribution. The brand, in his opinion, will keep expanding. He is supported by Deloitte experts, who predict that over the next 10 years, the worldwide EV would grow at a 29% compound annual growth rate. They predict that by 2030, there will be 31.1 million electric car sales worldwide, up from 2.5 million in 2020 and 11.2 million in 2025. Quote, 32% of all new automobile sales would be made up of electric vehicles. The company has a good chance of experiencing significant growth in the near future, according to Wallet Investors' algorithmic forecasts. It asserts that the stock is a fantastic long-term investment with a price target of $1,270 for the following year. The company's 5-year forecast for the Tesla stock price suggests that it could reach $2,940,000 by then, which supports our belief that the stock will soar in the near future in this rapidly expanding market. Tesla is in a great position already. There are a lot more Model S, Model 3, Model X, and Model Y vehicles on the road, since they are not just technologically sophisticated, but also aesthetically pleasing. Because of the company's flexibility and innovative spirit, we have faith that it will maintain its position as the industry leader regardless of the situation. There is no question that tenacity together with offering value is essential for success, and under the leadership of Elon Musk, a visionary, we anticipate even greater things in the future. Do you believe that the price of Tesla will soon soar? What growth rate do you anticipate? Post a comment below.